Atour Lifestyle Holdings beat Q2 2026 consensus. EPS came in at 60 cents, which topped the 57-cent estimate. And revenue surged over 41% year over year to roughly $514 million, or around 3.49 billion RMB.
Yeah, and they even bumped full-year guidance, right?
Right, exactly. Management guided full-year revenue to 30% growth and actually bumped retail growth guidance to a massive 40%. But despite this beat and raise, shares gapped down, dropping over 7% on high volume.
Which is a pretty brutal reaction.
Seriously. So for this deep dive, we're pulling from Atour's Q2 earnings release and call transcripts to figure out, why the market is punishing a stock that just crushed expectations. It's like acing your exams, but still getting grounded.
I mean, yeah, the market is basically looking under the hood of those fantastic headline numbers and seeing a structural shift in how this company actually generates cash.
Right.
Because if you look closely, adjusted net profit margins took a 1.3-point hit this quarter, dropping to 16%.
And that margin hit is directly tied to their segment split. So Atour's retail revenue, which is fueled heavily by sleep products like memory foam pillows.
Oh, yeah, the pillows.
Yeah, that retail revenue skyrocketed over 63% to about 1.5 billion RMB. Meanwhile, their manicized hotel revenue, so the managed and franchised properties combined, that grew by 32%.
Which is still good growth, but selling physical goods carries entirely different economics than franchising hotels.
Definitely.
I mean, scaling physical products means dealing with manufacturing, supply chain logistics, warehousing. It's incredibly capital intensive and naturally drags down the overall margin profile compared to an asset-light hotel franchise.
It's like opening a highly profitable fine dining restaurant, but investors suddenly realize, wait, 45% of your revenue is coming from selling your branded steak knives out the back door.
Yeah, exactly.
The money is good, but suddenly they just don't know what kind of business to value you as. Are they a hospitality company, or are they quietly becoming a high-end bedding retailer?
Well, and historically, the market had priced Atour as a high-margin lodging and pure play.
Right, those get the premium multiples.
Right, because those asset-light franchise models generate free cash flow without requiring heavy capital reinvestment. So with retail now pushing toward half of total revenues, investors are being forced to reprice the stock to reflect that lower margin, capital-intensive product mix.
Right, so the market sees that margin hit and panics. But if you read the transcripts, management is looking at the exact same data and doubling down.
Oh, absolutely.
CEO Haijun Wang essentially argued that the era of just slapping your hotel brand on 1,000 new buildings is over, and the industry is shifting toward what he calls high-quality growth.
Yeah, he's leaning into what they call brand-led excellence across their 2,175 operational hotels.
Wow, over 2,000.
Yeah, and to be fair to management, their core hotel metrics do remain solid. I mean, they maintained a revenue per available room of roughly 345 RMB.
Which is crucial.
Right, because it proves their core hotel assets are still operating efficiently and they're maintaining pricing power, even as they expand so heavily into retail.
But if you're an investor looking at these numbers, your primary worry is sustained margin compression. We're looking at a lower margin product mix, plus they will likely face rising marketing costs to keep pushing those retail sales.
Yeah, you have to spend money to sell those pillows.
Right. So can a retail pivot actually justify the premium valuation Atour historically commands over traditional hotel chains? Or is the market correctly repricing this?
Well, management's argument is that the retail business and the hotel business feed each other to create a moat.
Like a synergy thing.
Exactly. You stay at the hotel, you sleep on the memory foam pillow, you love the experience, so you buy the pillow. It builds a sticky lifestyle ecosystem rather than just selling a bed for the night.
Wait, but how many memory foam pillows does one person actually need? I mean, a hotel scales infinitely because people will always need a place to stay when they travel. But a physical pillow has a hard cap.
Yeah, you buy one, maybe two, and you're good.
Exactly. You're done for years.
And that is the exact skepticism driving the stock down right now. The market is essentially telling management, look, prove it.
Yeah.
Investors want to see if this retail expansion can achieve true economies of scale and drive repeat purchases across new product lines, or if it's just going to permanently drag down the company's profitability.
It leaves you with this final thought to mull over. Atour has 120 million registered members.
That's a massive base.
It is. But as they aggressively shift from a pure-play hotelier to a comprehensive lifestyle brand, will those consumers remain loyal to the curated experience? Or is the company risking massive brand dilution by trying to be everything to everyone all at once?
Yeah, it's really the ultimate test of brand elasticity.
Sure.
We'll have to see if the market forgives them next quarter once the dust settles on this new business model.
Be sure to follow the show for your daily earnings coverage, where we keep bringing you the details behind the numbers.